Hi, Christine.
Hey, how you doing, Bob?
Good, good. Have you taken the first test yet?
I did. I got 100%.
100.
I did.
Oh, we're gonna have to investigate that, huh? No, no. Congratulations. You've been working
Thank
hard
you.
and coming to class. That's good news.
Thank you.
I'm a bit at a loss what we want to do in this class. Do you want to? I have a feeling it might be just the two of us today.
Shoot, I mean, I could just like go over some of the worksheet. I still like, I think I just get overwhelmed, so to speak. I don't know how much of that. I'm sure there's tons of it on the test. So,
Yeah,
but
there'll be
that's,
questions about what column is what, that type of thing. Yeah.
oh yeah, and that I know.
Yeah.
Those I know, like the back of my hand.
Okay. Would you want to go over the worksheet again then?
The adjustment entry here, let me just look. I haven't even looked at, my mom was just here and I was talking with her and I got all distracted when I was looking. Let's see.
I live by myself and I get distracted.
I know, I do. Believe me, the older I get, the easier I get distracted.
Jesus,
I just go, it doesn't take much, my dog or whatever.
No.
The source docs. Though, but you know what? Those are easy. It's like if I have to, I have like earmarks on everything. Okay. So I know I put source docs, those ones I get confused on, but I know what those are.
Okay. Do you want to show your face, by the way, Christine?
Oh, I didn't even know. Yeah. Oh, it doesn't show that I'm not on. You can't. Oh, I know why. It's because I have a little sticker on it. There you go.
Yeah, that'll do it every time, huh?
Yeah, I always get nervous, like, you never know.
Yeah.
So I just put a sticker on it.
Hi, Patty. How we doing? Did you take the first test, Patty?
Yes, I did.
How'd you do?
I got a 50 out of 50 on it.
A what?
I got full credit.
Oh, good. You did okay on it. All right.
Yeah.
Good to hear. Yeah, Christine did very well too. I would expect no less. Christine and I were just saying, what do we want to do with this class time? And I guess maybe go over a few questions you guys might have in regard to the second test.
Yeah, there was one thing I was going to look at. I need to figure out which quiz it was on. It's either 4 or 5. But if you want to start talking while I try and figure this out.
Okay. All right, Christine, you were saying before. You were talking about source docs.
The what? Oh, the source docs. I'm fine. I looked at that. I'm good. It's mostly like just the entries on the worksheet from the general or. I get confused on that. I mean, but honestly, I haven't started to study yet for the second phase. Okay. So I'm like sitting down kind of like at a, weird point right now. Like,
okay.
But because I had to do a lot this morning. So now I'm done and I'm going to study now.
Yeah.
So
the adjusting journal entries, that's the kind of the harder part.
Yeah.
You're debiting an expense.
Yeah,
And you know, if it's supply, and you know, if it's supplies expense, it's gonna be supplies as the credit.
right.
If
Like
it's,
that I get. It's like getting it all on the worksheet and like when it goes, you know, like, but like I said, I haven't studied yet today for that.
okay, okay, all right. Let's see what Patty might have for us. Yeah,
Okay, so yeah, I figured it out. It was on quiz 5. We have a question regarding it was the free response one, and it was the like part B, like company pays its employees every Friday. On January 4th, company paid 2,200 for the 5 days beginning the previous Monday, December 31st. Prepare the adjusting entry for December 31st. And so when I was doing it, I was confused because you're never actually, well, unless you have a very, very strict policy, you're not going to be paying the same amount for every day. You might have different people on, especially for like wages. With salary, I could imagine you could maybe divide it by the actual day.
yeah,
But since we don't have information, I was confused on like how, if I should just divide it by the 5 days and then be like, okay, on the 31st.
yeah, I think so. I think so. Could you read it one more time or
Oh, okay.
paraphrase?
Yeah. Zip company pays its employees every Friday. On January 4th, 20 whatever, the company paid $2,200 for the 5 days beginning the previous Monday, December 31st.
Okay,
Prepare the adjusting entry for December 31st.
okay. Well, they're giving you the 5 days. You don't have to divide anything. That 2,200 number is for the whole week.
Okay, well, yeah, but the idea is that, you know, you're preparing an adjusting entry for December 31st,
Right.
but they're being paid January 4th, and it includes the 4 days of January that they worked. And so how do I know how much they made December 31st for that entry?
Well, they're telling you, Patty. Is that it?
No, they're not. They're telling me for the 5 days, but only one of those days was in December, and they're asking for specifically the adjusting entry for December.
Is that something you could share on the screen with me?
Yeah,
Let me
here.
take a look at it because
I remember that one. That one was confusing.
Yeah, I actually wrote in my answer, I'm like, please rephrase this question because it doesn't actually make
Makes
sense.
sense.
I'm
Yeah.
like, my answer is just BS.
Yeah.
I guessed.
and you gotta give me about a week or so, but I do go through every question on the test.
Yeah, no, it's all good.
Cornelia is the one who's actually looking at them first.
So
here's the famous quiz, huh? That's the first time.
yeah, so it's this part, or like this particular one.
Zip company pays its employees every Friday. On January 4, they paid 2,200 for the 5 days beginning the previous Monday. Oh, I see what you're saying.
Like, if it's salary, it makes sense, but with wages, like I don't even know if they're working that day.
Yeah. It's a very, very poorly worded question. You're absolutely right. Because it said they paid 2,200 for the 5 days beginning the previous Monday, December 31st. I have a feeling I'll bring this one to Cornelia's attention because that's clearly what's the word I want? Vague, to say the least.
Yeah, that was.
I know what they wanted. I know what they wanted to say. They wanted you to accrue the $2,200. I know that's what they wanted you to do, but from reading that, you would not know that.
Yeah, and
like you say, well, it says the beginning the previous Monday, 31st. That's 1 day. So your question was, what do I do? Divide it by 5?
Yeah, I mean that's what I did because I'm just like, well, I mean that's the amount that's the closest guess I could get to how much was actually made that day.
Yeah. You will get credit for that problem. Everybody will. That's called a freebie. So you did the class a favor there. I might not have caught that one if someone didn't bring it to my attention. So that was a good bit of input. Hi, Krista. Are you ready to? You got anything, Krista, that you want to go over or?
I just started back in on chapter 4 today, reviewing everything and redoing my homework and redoing my quizzes.
Good.
So not yet.
Okay, did you take the first test, Krista?
I did, yes.
May I ask how you did? Good,
I only
okay.
missed one and I knew the answer. I read it
Oh.
wrong.
Oh, my goodness, you're not gonna sleep all weekend then, huh? You missed one.
It's okay.
Yeah, we have 3 good grades so far. Well, it helps when you come to class too, you know.
Yeah.
You know, makes a little bit of a difference. Okay. Should we go over, should we try to review chapter 4, 5, and 6 again? I mean, I'd be glad to do that.
I wouldn't mind, but
Okay. All right.
Yeah.
Well, all right. Let me do that. I'll call up my PowerPoint, see if I can make some other presentations. And I remember, Christy, you came in a little bit later to the class on Wednesday. And that's when I was going backwards from chapter 654, if I remember.
correct,
So,
yes.
okay,
But has
okay.
everyone else already taken the part 2 of
No,
the
not yet.
test? No?
I was just
No.
planning on taking it tomorrow.
Okay, yeah, okay.
Yeah, I'm taking it tomorrow too.
Okay, so yeah, I don't want to waste anyone's time.
No.
All
you're
right, here
fine.
we go. Hold on here. All right. You want me to go backwards or forwards, Krista?
Forwards, please.
I'll go forwards. I'm sorry, being a wise guy. Chapter 4. Okay, what do I got here? I got PowerPoint slides. Come on. There we go. We share and share. Okay. All right. We're looking at 3 chapters, so we can go through this in as much detail as you like, or we can stop and go over any particular questions you want to go into in a little more detail.
All right.
I think I shared the wrong thing. Hold on. Share.
Yeah, we're still on the
So can you just go over the quizzes or is that illegal?
You mean the last quiz?
Yeah, the 4, 5, and 6 quizzes.
No, I'm not supposed to go. I mean, I'm going over it in a way. Believe me, everything I'm trying to get through to you guys is going to be there one way or the other. But yeah, we can do a quiz kind of review here. Yeah, 1 second. Come on now. All right, we're talking chapter 4. So if you can see that now, right, Christine?
Yeah.
Okay. I always count on Patty with the Welsh signal there. Describe the flow of data. Source documents, I don't think we need to talk about, do we, Krista? I'll let
No.
Krista, I'll let you drive the meeting since
No, don't let me drive the meeting. That's not fair.
well, someone's got to drive it.
Yeah, you're in charge. It's all you.
All right, I am. I'll use that power. You know, this is the process. You analyze and you enter transactions and you post. I don't think we need to look at that. Source documents, anything you can put on a piece of paper is how I describe it. And when I say paper, you don't necessarily have to print it out, but we're talking emails and texts and even notes from phone conversations. But we're really talking mostly about sales orders, cash register tapes, invoices, checks, things like that, source documents. They're objective evidence. And you're always filing them along with your journal entries, and they're always available to be pulled, either in the form of a hard copy or a quick printout from your system or Excel or something. Source documents. Check stubs, more examples here. Purchase invoices. Learning object, the chart of accounts. The chart of accounts goes in what order, everybody?
Numeric.
Exactly right, according to the chart of accounts. Yep. And it goes in order of assets, liabilities, equity, revenues, and expenses. And normally you can number your accounts any way you like. Christine, you work in QuickBooks, you said, right?
Yes.
When you set up a new account, they assign the number automatically, or do you have to assign it?
Well, I have one client with two entities that have numbering, because not all of my clients have numbering or
really?
use the numbering. Yeah.
Okay.
But QuickBooks does it. You just, when you say, oh, I want the numbering, and then every time you add a different account or whatever, then you just fill in the account number.
Okay. Okay.
Yeah.
And here's a look at a chart of accounts you've not seen before. They're just showing you the different new items. We're looking at prepaid insurance and prepaid supplies. Supplies is the asset. Supplies expense is the expense, huh? Wages expense. Excuse me. Now here we started to learn about journal entries. Journals, these are the day-to-day listing of the transactions. There's where you'll see each transaction. That's the definition of a journal entry. And we're using the normal 2-column general journal, 1 for debits. And these are the 4 things that should be included. Now on the test, once in a while, they like to ask this kind of question. They'll say, which of the following do you omit from the journal entry? And they might give you date, title, amounts, and then they'll say a signature, something like that. But these are the 4 things you need: the date, the title, the amounts, and brief description. We realized that every journal entry must have 1 debit and 1 credit at a minimum. Debits must equal credits. You can have 100 debits and 1 credit, or you can have 50 debits and 62 credits, as long as the debits equal the credits. And then we can go through these transactions if you like. And if you think I'm going too slow or too fast, or you have questions, jump right in there. The journal entry itself. That's a nice looking journal entry, huh? Look at that. We have a date. Now here's the kind of question they might ask once in a while. I saw this question like 2 years ago, and I thought it was a very unfair, stupid question. But the question was the same question I had before. It says, what don't you do with every journal entry? What does not appear? You see where it says June 1st, and above it, it has that 2019 or whatever. You don't repeat the year. You don't repeat the year. And I thought that was kind of a strange question to ask. But anyway, that might be a little bit of a warning if that one recycles back, okay? Anybody got a problem at least writing the journal entries? I mean, how to write them once you know what goes in them, huh? I wouldn't think so. A compound entry means more than one item. And here they're showing you some compound entries. Here's one that's not compound. They bought supplies for cash. Supplies are debited, cash are credited. Cash accounts receivable. Here is a compound entry here. Purchased scooter with down payment, balance on account with big red scooters. Boy, they're giving you a lot of information there, but that's okay. You debit $1,000 for delivery equipment. You have to recognize that you spent $300 in cash, credit cash, and the other and accounts payable will go up with a credit. Cash goes down with a credit. Accounts payable goes up with a credit. All right. Posting to the ledger and preparing a trial balance. Now we've written all of our journal entries. We've written them all. And now the general ledger contains everything we recorded during the month. And our general ledger, think of it as similar to the T accounts. The T account itself is just a piece of scrap paper used to organize data. You work in accounting career-wise, you're always coming up with T accounts. You'll be discussing something and someone will say, let me go up to the blackboard and put it through T accounts. And then it makes sense. It's just a way to organize your numbers. But the general ledger mimics the T account. And it's going to be a double T account in the general ledger. So here we go. Here's the T account. right here on the left. And here is the cash piece of the general ledger. We started off $5,000 we entered into the company. This is the 5,000 Mitchell invested. So we debit cash for 5,000. That brings our balance to 5,000. He then spent 2,000 on motor scooters, I remember. That reduces cash with a credit and reduces the balance. Okay? So you have two T accounts here. One is for the transaction itself, and the other one has the balance. Now, as you're looking at these balances, if you ever see a credit balance pop up on this side here, you know there's something wrong. There's something wrong. We know now that assets have a debit balance, normal debit balance. The way to say that they should always have a debit balance. So that's what we're kind of looking at here. And then we come to the end of the month after this $3,000 transaction. And what is the balance in the general ledger? $470, which matches right over here. We shouldn't have any trouble footing the T accounts. Did they ask you to do that on the test at all? Come up with the balance on a T account? Not really? Okay.
Well, they might do that for the second part.
Yeah,
We might. Did we have that on the quiz?
I thought we had already.
I know.
You forgot already.
I know. It's like,
Wait here. if
actually, I
get-
could look. I could look at mine. I have
How
a copy.
easy
This is quiz 4. Should be. I don't think it had us really do anything with any sort of calculations for this one. We just had to
Okay.
label transactions and what accounts they
Okay.
affect.
Yeah,
All
on the quiz for chapter 3, there was questions on it. There was at least one on there.
Okay.
Oh,
All right.
well, it was like what part is the footing? It's like
Yeah,
Yeah.
like the totaling of each column.
Okay. So
Right.
here you're gonna get the numbers and the actual transactions then.
Yeah.
So I don't think we have a problem with the posting, do we? We write this out in our T account. And then it sits there in your computer screen. You've got this T account sitting there in QuickBooks or whatever. And then you look it over and you say post. And you hit the button post, it brings all of this over to here. Post, this is the act of what they call posting, moving data into the general ledger. And once in the ledger, it can never be erased or stepped on. Posting to the ledger. Wow, they're making this kind of complicated, huh? A 5-step process. Well, they're talking about the journal entry. Enter the date, the debit, the balance. Let's take a look. And that's pretty easy to grasp, huh? Oops, I gotta see it though. Cash. Mr. Williams put 5,000 in his business. They're using as the posting reference the account number. It doesn't necessarily have to be the account number. It can be something else, but that's what they're using in your book on this problem here. So that journal entry, we looked at it. We think that entry is good. We hit post, and now your general ledger has been updated. There's the receipt of the 5,000 into the business. There is the balance after that investment. And the trial balance is not a report that anybody outside the company wants to look at. Nobody cares about the trial balance once the financial statements have been blessed. The trial balance is strictly for the accounting people to work with. Where I worked for many years, at the end of the month, you'd hear people running around the office. Who's got the trial balance? Who's got the trial balance? Because you really needed that to do your work. Then you'd hear people going, who's got the updated one? I got the old one, you know? So the trial balance is strictly a work piece. That's the start of our 10-column worksheet. And there's your trial balance. Again, it is an order of assets, liabilities, equity, sales or revenues, and expenses. It's also in order of liquidity when it comes to assets and liabilities. And we'll talk about that a little more. how to find and correct errors. I don't think they put this kind of thing on the test. The only proper way to correct an error, in my opinion, is to reverse it and then write it again correctly. That gives you the auditor can really see what happened then. The auditor comes in and she says, oh, I see what you did. You made a mistake here. I understand that. You're reversing it here. Okay, so we're back to the beginning and now you're putting it in correctly. They're talking about double linings and things like this. Again, I don't think that this is going to be on your test in any real way at all. I'll go out on a limb on that. I just like the divisible by 9 trick, right? 52 minus 25 is 27 divisible by 9. Any slip in a number, any transposition in a number is going to result in a divisible by 9 difference. And that can be very useful. You might think it sounds silly, but it can be useful. If the tips don't work, I believe I said you're screwed, right? If the tips don't work, you must, what can you do? You just got to retrace. Maybe you have to do it all over. I don't know. You must retrace your steps, double check your addition for the ledger accounts, trace everything. Erasing is not acceptable. We know that. You never erase, never, never, never. You make the correction in a manner that's easy for others to follow. And then you make a new entry to correct the old one. They're not making you reverse the entry like I say and then put the new one in. They're saying you can kind of correct it with one entry, but that's going to get you in trouble because you're never going to remember why you made that second entry. Correcting entry method. What's this? Assume a $400 payment for rent expense was incorrectly debited to repair expense. Okay. So here's what I'm talking about. A $400 payment for rent expense was actually debited in error to repair expense, right? So the way they're telling you to correct it is, well, we know we should not have debited repair expense. We should have debited rent expense. So they're debiting rent expense to get it right, and they're crediting repair expense to get it right. That did fix it correctly, and you're okay. But that's a terrible habit to get into. Mainly because if you've got a journal entry that affects the balance sheet and the income statement, this reversing technique causes more, this technique here causes tons of problems. And I got burned on that, many years ago, a couple times. Wow, chapter 4 wasn't too long, huh? Anybody want to say we're okay with chapter 4? Patty, questions?
Nah, but I do want to make a comment of if they do ask that question, we need to remember the wrong way to do it, really. Because I think if the question is on the test, it'll be for that type of way of dealing with it.
I like your question, Patty. You're very practical. Yeah. Don't do it the way I said. Do it the way the book said. Yeah.
In the real world, do it the way you said, but
Yeah.
or we'll do it the way your company actually does.
I'll try to explain briefly if you like to hear why their way is no good. Sometimes a company wants to do what they call cleaning up the balance sheet.
Yeah.
And for example, you have an accrual for vacation pay, okay? And you have an accrual for, say, workers' compensation pay. And those expenses are sitting there, and your boss says there's too much money in workers' comp, move that over to the other one that is short, vacation pay. And if you just debit vacation pay and credit workers' comp or vice versa, you're not putting in the appropriate liability that belongs with it. Your auditor is going to come in and they'll see an entry for additional workers' compensation. And then they'll say, well, where's the payable that goes with that? Well, you ignored the payable because you just did the two accruals back and forth. You may not quite understand what I'm saying, but yeah, do it their way for now, okay?
Yeah.
I did it my way, okay? You ready for chapter 5?
Yes, sir.
Chapter 5, all right, chapter 5. Chapter 5, what happened in chapter 5? Chapter 5. Screen sharing has stopped. How'd that happen? Modules. Chapter 5. Yeah, chapter 5 is the tricky one, I would think, with the adjusting journal entries. And every company does adjusting journal entries. You cannot avoid them. Come on. Share screen. All right. Let me do my Sheldon Cooper thing here. All right, adjusting entries and the worksheet. Rah. Prepare end of period adjustments. These adjustments are entries that do not affect outside parties. You're not dealing with the real world. You're dealing with your own company. And you are now saying to yourself, well, our equipment wears out. We're allowed to record what's called depreciation expense. We recognize that we paid this insurance policy in advance. Well, of course you paid the insurance policy in advance. You can't buy it after you have the event. Anyway, prepaid insurance and supplies are now being used. To the extent they're being used, that becomes that month's expense. And then here's what Patty was talking about with his question. Employees earning wages that have not yet been paid. Okay, the last week of the month, that company paid out, not paid out, but recorded $2,200 in expenses. That is your adjusting entry. Since these events have not been entered into the accounting system, adjusting entries must be made. And the reason for it is the matching principle. The matching principle, and they'll probably have that on the test. What does the matching principle match? Revenues and expenses. Revenues and expenses. That's the whole idea of accrual accounting, in that the sales you record have been done on an accrual basis, as have the expenses. If they're not done on that basis, you're going to have financial statements that are not correct. And that can lead to lots of problems. The revenue recognition principle. We know this, right? Revenues should be recognized when they're earned, regardless of when cash is received. When earned. Those are the on-account transactions. On account, it's either going to be accounts payable or accounts receivable, depending, which ox is being gored, okay? Revenues are considered earned when the service or product is delivered. Again, we don't care when we get paid. We delivered the pizzas today. That's our sale. We might not get paid for another month. Expense is the same thing. You recognize them when they're incurred. One accrual that there are a lot of other accrual entries that they could have shown us here. Let me talk about another accrual that will not be on the test, but I want you to hear it anyway. The month ends and you have no electricity expense recorded. Well, you used electricity. You also know you're not going to get the electric bill for another 25 days, and you must turn out your financial statements. Well, that's an example of another accrual. You have to estimate how much electricity expense would have been that month and record the appropriate accrual. The point is, you incurred the expense when you turn the lights on all month. Now you have to recognize it with an adjusting entry. And expenses are incurred when services are received or assets are used up. Matching principle matches revenues and expenses. If you do that properly, you've got the best measurement of net income. You've got a net income that is absolutely correct and prepared in according to GAAP rules. To follow all three principles necessitates that accounts be brought up to date before the statements are prepared. And that's what we're doing with the adjusting entries. We know what a fiscal year is. Any 12-month period does not have to be a calendar year. General Mills, the farming company, they start their fiscal year with planting. Nordstrom's, they start it maybe in, I don't know, beginning of February, because they want to make a big splash after the December big sales. And many businesses schedule their fiscal year to end when business is slow. I don't know, I don't have any examples of that, but that would make a great deal of sense. Nordstrom, again, their slow period is probably the first quarter of a year. So, they get through a busy December. Maybe January has a lot of returns and sales returns and allowances. And then maybe they close at the end of that month. Adjustments are made and financial statements prepared at the end of the fiscal year. We know that's a bunch of baloney, right? It's once a month. Companies look at their records once a month, right? Do any of your clients say, I'll see you in a year, Christine?
No.
It's always a month. There we go.
Yeah.
We know that. So let's start looking at the journal entries again. We purchased supplies. We purchased them in June. We could have purchased them in May. Okay, we bought supplies. That's an asset. So we debited supplies and credited probably accounts payable or cash. So we debited supplies. And then they're saying, according to an inventory of supplies, there is only $20 left of the stuff at the end of June. Well, the 20 is not the expense. And this is where it's easy to get confused if you read the question too quickly. There are only $20 worth of supplies on hand at the end of the month. That means we consumed 60. We consumed 60. So our journal entry is going to be a debit to the expense for 60 and a credit to supplies. Now, let me talk about something here I didn't really push in our prior class, and maybe I should have. The first sentence there, unless there's an adjusting entry made, $80 of supplies would be shown on the balance sheet, right? That means our assets would be overstated and our expenses would be understated. We understand that, right? The reason I mention this is they once in a while throw in a couple of questions where they'll give you a wrong journal entry in the question. And then they'll say, what is the impact of this? And then you'll have 4 choices. And if this was the question, you'd have to say assets would be overstated, expenses would be understated. The question might say assets would be overstated and net income would be understated. No, net income would be overstated. I don't want to make that any more complicated, but hopefully you get the idea there. So we write that entry for $60. And there it is. Supplies were 80. We used 60 to get down to 20. And we debit supplies expense. And we're done. We are done with that entry. Prepaid insurance is the same exact thing. This is supposed to be $700, but during June, Mitch paid $700 for a 10-month policy. He's paying $70 a month in liability insurance. And when he bought the policy, he debited prepaid insurance and credited cash maybe. So we have $200 sitting in prepaid insurance as of June 30th. The policy begins on June 1st. So he used $70, 700 divided by 10 of that policy, right? Our journal entry. June is over. We remove the cost, 700 divided by 10. Debit the expense to increase it. Credit the asset to decrease the asset. And here we go. They threw the prepaid insurance in. 700 minus 70. And this same exact entry is going to be written 9 more times until we use up all 700. And the balance in the prepaid is going to be 0. The prepaid accounts will eventually go down to 0 by definition as you use up the service. And here's the insurance expense, $70. So we picked up 2 more expenses there, huh? Now here we go. The wages. He paid his employees $16.50. Again, this is wrong. It should be $16.50 on top. Rowan paid his part-time employees $1,650 on June 27. But they worked others, but the people did work on the 28th, the 29th, and the 30th. And in those 3 days, they earned an additional $400, but that has yet to be paid, okay? We have to recognize that that $400 is part of June's expenses. That's when the work was performed. That's when the employees did the work. We don't care when they're going to get paid. We don't care when payday is. So we have to obviously, I guess I don't want to use the word obviously, but we are going to debit wages expense for that 400 and recognize an accrued liability called accrued wages payable. Your book says just wages payable. That's okay. You debit wages payable and you debit wages expense and you credit the payable. At that point in time, the right expense is set up and the correct liability is there because that liability existed when they earned that money. And again, they're showing you the wages. We had $16.50 already. That was to pay the payroll through the 27th, which was processed. And now we have to accrue another 400 on top of that. And now you have a liability set up, $400, wages payable. Now we're talking about the fixed assets, huh? Assets are recorded at their original cost. Everything on your financial statement is at its historical cost. You bought land years ago that's worth a lot more money now. You cannot write up, if you will, the cost of that building. It's going to remain at $100,000. The only time you can show any income on it is when you sell it, okay? So the cost remains on the books as long as the business owns it. No adjustments are made for changes in the market value. And you're starting to get the sense now that the net book value of a company, meaning assets minus liabilities, that remaining net book value might have nothing to do with the market value, okay? Useful life. When we buy a fixed asset, we have to estimate, and it is estimating and it is allocating. Fixed assets depreciation is an estimated allocated number. We're guessing. So we bought a car, for example, and we think this car is going to last us 5 years. That's the useful life. And the company's useful life is going to expire as the result of the wear and tear. And expenses should be recognized over time. Depreciation. Method of matching an asset's original cost against the revenue, blah, blah, blah. There are many depreciation methods. The only one you're going to have on the test, I'm quite sure, is straight line. Straight line. Depreciation expense is based on estimates of the useful lives and salvage values. Understand salvage value, what it is, and how it comes into play when you're writing the journal entries. The expected market value or selling price of an asset at the end of its useful life. It's called salvage value, scrap value, residual value. The key point here is you can never depreciate the scrap value. You can never have the net book value of an asset go below the scrap value. So let's take a look here. He has Mitch bought motor scooters with estimated useful lives of 5 years. No salvage value, so that makes it easy. And an original cost of $4,800. He divides that $4,800 by 12 times 5, 5 years, 12 months, 60 months. 4,800 divided by 60 is $80 a month. So every month, he is going to record this $80 in depreciation for the next 5 years. You are going to debit depreciation expense and you're going to credit accumulated depreciation. Keep in mind that accumulated depreciation is a contra asset. It's married to the building. It's married to the equipment. It is the opposite sign control. A fixed asset, a building has a normal debit balance. It's an asset. But it's offset by the contra asset, accumulated depreciation, which has a credit balance. Now, here's a question they ask once in a while, and I can't remember if this is on a 230 test or a 110 test, but they'll ask the question this way. They'll say that they purchased $1,000 worth of, they bought a car for $1,000. Never mind. If I'm confusing myself, it's going to screw you guys up. Let me scratch that for 230. For our purposes here, $80 a month. What is net book value? Net book value is the original cost of the asset minus the accumulated depreciation. You never credit the original cost of an asset. Now, on the test, they're going to give you a transaction, and then the four choices are going to be debit, credit this, debit, credit, they'll give you 4 possible journal entries. When you're working with fixed assets, you never credit the original cost of the asset. You're never going to credit building. You're never going to credit machine, okay? Never. What you do credit is the accumulated depreciation. And remember that the value of that asset that you're depreciating has nothing at all to do with the market value. It could, but it would just be a coincidence. Now I'm going to go back up here and I'm going to change this problem just a little bit because they don't give you an example. Let's change the wording of this slightly. Let's say Mitch has motor scooters with an estimated useful life of 5,000 and an original cost of 5. Let's change 4,800 to 5,000. And then he says the salvage value is 200. He paid 5,000 and the salvage value is 200. You don't depreciate the salvage value. So you would take that 5,000 and subtract the 200 and get to the same 4,800. Then after you've depreciated the full 4,800, what's the balance in the net book value? It will be the $200 salvage value. You can never depreciate below the salvage value. That type of thing might pop up. Book value, asset price minus the accumulated depreciation. Accumulated depreciation, what is it? It's a contra account, means opposite. It has a credit balance, which is the opposite of a normal asset. It's deducted from the related asset. And when we get into our next, we're going into chapters 10 and 11 next. When we get there, you're going to see a whole bunch of contra type accounts. It's deducted from the related asset account on the balance. And your journal entry is always the same. Debit depreciation expense, credit accumulated depreciation, okay? Here we go. Depreciation expense, 80. Accumulated depreciation, 80. We never going to touch that delivery equipment. That 4,800 is there forever unless we sell the asset. So what's going to go down by $80 every month? The net book value. At this point, I guess it's 47.20, and then it goes down to 46.40. I'm not going to do the math, but you get the idea. And now they're just showing you some of the new accounts you're seeing for the first time. Accumulated depreciation. And look at the numbering system. Look at the numbering system. When you see these decimals here, that's likely a contra asset. Now on the test, they might, like I say, I mean, I haven't really studied the test at all, but on some of the tests I've seen in the past, they might have a question on these numbering systems. They might say 192.3, which of the following accounts is that? And you have to be aware when they say the 0.2 or the 0.1, that it's a contra account. And you have to pick the contra out of the 4. Okay. So we've had how many contra accounts so far? We've really had 2. Accumulated depreciation, which is an asset with a credit balance. And then we had withdrawals, which is a capital account that carries the opposite balance of debit. All right. Post them to the general ledger. Here's your general ledger. We posted 60, the balance is 60 for the supplies. And then they've got this going here. Supplies, we debit 60, supplies expense, and we credit supplies. We debit, how'd that happen? We debit 60. What did I do, lose it? Well, all of a sudden wages expense popped up. Let's look at it. We accrued $400 in wages. That comes over to the wages payable, the liability. The expense was 400, goes to the expense. Depreciation expense 80. And there you're seeing the credit here. And then below it, we should see the depreciation expense as the debit. Any questions on the adjusting entries? Are you feeling pretty comfortable with them at this point? Because this is the trickier part. You know, we've been over this in pretty good detail. Prepare the worksheet. Oh, the worksheet is the big 10-column thing. Now, on the test, I repeat, they love to ask questions like this. What are columns 5 and 6 on the worksheet? And you have to know that that's the adjusted trial balance, because the 10 columns are the beginning trial balance. Columns 3 and 4 are the adjustments. Columns 5 and 6 are the adjusted final trial balance. 7 and 8, the income statement. 9 and 10, the balance sheet. So the worksheet's not a financial statement, usually an Excel file, I bet. Only the accounting people look at this thing, okay? And this has been used forever, as far as I know. And like I said, we used to do these in pencil. And I'm kind of a nerd. I used to like to do this until it went out of balance. Then I didn't like it too much. But what do? Here are your 5 steps. You do the trial balance, that's columns 1 and 2, adjustments, columns 3 and 4, adjusted trial balance 5 and 6, income statement 7 and 8, balance sheet 9 and 10. All right. Worksheet preparation, talk about the heading. You can put whatever you want on top. It's not a formal report. Prepare the trial balance. This is the same trial balance from chapter 3. Okay. Prepare the trial balance, write the heading, count titles, place a single. Here they're talking about double ruling things. We're not going to worry about that. Prepare the adjustments. Make certain that each adjustment is on the same line as the account. That sounds silly and obvious, but yeah, that's an easy mistake to make. If you've got a long list of accounts, it's very easy to put it on the wrong line. Do your adjustments, total them up. Debits must equal credits, huh? Who knew? So here's the start of our worksheet. You might remember the numbers. Remember the famous 470 we had in cash? We just looked at it. 3,100 in receivables. What were the 4 entries we just did? Well, the first entry was to recognize the $60. Oh, I'm so sorry, guys. Forgive me. Got happy fingers here. We recognize the $60 in expense with a debit, and we credit the supplies. So we had no supplies expense to begin with. Now we have 60 with this adjusting journal entry. Here, we recognize that we've used $60 out of that 80. Same thing with the insurance. We purchased a policy for $700 and we used up 70 of it here, recognizing as an expense. Now we use 70 here. The accrual of the wages, that's an expense. Credit wages payable. Let me repeat for the 10th time. Your adjusting journal entries are always a debit to an expense. Always a debit to an expense at this point. And you'll never have cash in an adjusting journal entry. And I guarantee you, I'm going to see cash from some answers. Depreciation expense, that was $80 a month, I remember. Debit depreciation expense, credit 80. This is the hard part right here. The hard part is getting the adjusting journal entries done correctly and entered into this worksheet. Once you've done this, the rest of it is like falling off a chair. Really, it shouldn't be that tough. It's just intimidating because there's a lot of columns. Prepare the adjusted trial balance. Extend those debits and credits that are not adjusted directly. Enter the adjusted balance in the adjusted trial balance pair of columns. And then they're talking about single rule, double ruling, not worried about that. So let's get a good look at it. Look at that, huh? Well, let's go line by line a little bit. We had a trial balance of cash of 470 and accounts receivable 3,100. Well, we never adjust those. So they just come over 700. Here we had a debit balance of 80 in supplies, and then we had a credit. So 80 debit, 60 credit leaves us with a $20 debit balance. Look at the prepaid insurance, same thing. $700 balance to begin with, and we're taking out 70 a month. So that leaves us with 630 there. Delivery equipment, you're never going to adjust that. Never, never, never. But what we are going to do is reduce the net book value, which was 4,800 to begin with, and is now 4,720. So we had zero to begin with because it was a new purchase, I suppose. And we're recording our first month of depreciation, $80 credit, $80. Accounts payable, you are never going to adjust that. Wages payable, here we go. 400. Capital drawing, delivery fees, and the ones that we adjust right here. Wages expense was 1,650. Now it's 1,250. Rent expense, we didn't have to adjust it. Supplies expense, phone, we didn't adjust. Insurance expense, depreciation expense. Feel pretty good with that, Patty? How to move those numbers over there?
Sorry. Yep.
Okay, because that can be a little tricky when you haven't seen this too much. So
I understand it. It's just a matter of practicing it.
Yeah. It's, if you have two debits, you add them. If it's debit and credit, you subtract, and the high man wins when you go over to the adjusted trial balance. And now that we have the adjusted trial balance done, we can now prepare the financial statements. And wow, look at all this information here. Let's just go to the chase. Here is your completed worksheet. Okay? And remember the Bob tip. Everything above the sales line is balance sheet. Everything starting below drawing is income statement. So here's your income statement. They had sales of 8,000, and they had these 6 or so expenses that totaled $3,360. So that column is out of balance, which is good. We want it to be out of balance, and we want the credit side to be a lot higher in this case. So the difference is their profit, their net income. Sorry, guys. The difference is their net income of 4640, and you just add that down to the you add it to the lower number just to rebalance yourself. Okay. Now, if we've done things correctly, we should be out of balance by the same amount when we come over to the balance sheet, and we are out of balance by the same amount. This time as a credit. So what do we do on the balance sheet? We just bring everything over. Don't make a mistake that I make once in a while because I go too fast. And it's very easy to make. You go through all the trouble, everybody, of coming up with the adjusted trial balance. And then when you bring the final numbers over, you go back here. You use the numbers that you've adjusted. That's a very easy mistake to make. And very easy mistake. when you go
Especially
too
if you're
fast.
scrolling around to get the numbers.
Exactly. Yeah. Yeah. Just put a big black
God,
X
you're
through it.
doing the
I think-
homework sometimes a nightmare because it's just like scrolling up
Scroll
and
up,
down.
Yeah.
scroll down, scroll
Right.
up, scroll down. I started printing out the up so I
Yeah,
could just look at it on a piece of
I've
paper.
been pretty close to doing that. A lot of the time, I just take a piece of paper and I just like write down the number that I know I'm gonna need, and I'm like,
Right.
it takes so
Yeah.
long to do that just with the scrolling and the scrolling.
Yep.
Yeah.
That's what I found the most confusing was that. It was like, I think it would have, to me, if it looked more like a worksheet on the, on the quiz or whatever that we were,
Yeah.
the homework part, I think it would have been a lot easier, but it's just like a blank, right? There's
Yeah.
just, it doesn't look like.
And
a
it's
work-
all oriented vertically instead of horizontally.
Yeah.
Oh,
Exactly.
yeah. That's bad. Yeah. That makes it a
Yeah.
little harder.
It's harder.
I think that's what confused me.
So you don't go from left to right, you go from top to bottom.
Yeah. It's
Yep.
not like
Yeah.
it's not like you can turn the computer upside down and you're
Wouldn't
just
work.
stuck that way. Okay.
Exactly.
But you have a pretty good understanding then with the worksheet?
Yeah.
It's not
Yeah.
too tough. This is the hard part, just getting the journal entries done. So now at this point, you can take that 8,000 and call that your sales. And let's look at the income statement. Let's look at the income statement. Methods for finding errors. We're back to that again. Adjusting entries, journalize. We just saw the journalizing of these. Okay, here we go. They're turning this into something much more complicated than it needs to be. But they're showing you the journal entries. Okay, we know that. What the point they're making here, everybody, is just because you put it on the worksheet doesn't mean it's in the general ledger yet. You still have to post the journal entry. Cash, modified cash, accrual basis. No, we're not going to talk about that at all. We are strictly accrual basis. Accrual basis. Revenues are recognized when earned, expenses when incurred. That's the whole world of accrual accounting, okay? And it's the best match of revenues and expenses. The best method of measuring income for most businesses, smaller service organizations, can get away with the cash. Like I told you, my brother-in-law with that suspicious Italian family. And you ever watch The Sopranos? Anybody on television?
No.
That's where I grew up, Essex County, New Jersey. So and
But
my brother-in-law is Italian guy. We always tease him about that.
whenever I think about like suspicious restaurants, I used to live down in Ventura, and there's this one Chinese restaurant that you never see anyone parked in, but it's been open for like decades, and you're just like, but no one goes there. How are they making money?
The front.
Yeah.
It's a
That's
bookie
not right.
joint when you walk in.
That's suspicious.
Yeah.
Yeah, the last time I got back to New Jersey, my brother's widow took me to the restaurant where the Sopranos used to always go for their ice cream. And big deal. Okay, accrual basis of accounting. Cash basis. No, we're not going to talk about that. The only thing I'm going to say with cash basis is this. You sold something you sold $1 million worth of goods in the month of January, right? But you're not going to get paid for them for another 2 months. Under cash accounting, you wouldn't even make an entry in January. You would wait until March and then record the revenue. And obviously that's wrong. If you go on a cash basis, you're going to put yourself out of business before you know it. If you're a fairly big company, I mean. Okay. We're good with chapter 5, you think? All right.
Yeah.
Chapter 6. Chapter 6. Let's see, we got this. Get rid of that. Chapter 6, PowerPoint. PowerPoint. That looks good. Share. All right. Okay, we can see that, right, Patty? Financial statements in the closing process. The worksheet. Wow, we're back on the worksheet again. Used for 3 major end of period activities. Adjusting entries. Prepare financial statements with the, did I pull up the right chapter here? We're on chapter 6. Oh.
You did.
All right, let's, I think they have a little filler in this chapter. All right, let's see where it takes us. The worksheet, we know about the worksheet. Prepare the financial statements with the aid of the worksheet. And this is important. I guarantee this will be on the test. What order do you do the financial statements? Income statement, equity statement, balance sheet. That sequence. Income statement. Oh, I remember this now. They're talking about income statement. Yeah, the key thing here is on your income statement, I'm going to point out again the heading. You know, you want the company name, income statement. And remember, you must say something like for the month of June, for the month ended June 30th, for the period of June 1st to June 30th, because the income statement is a video. We're laying scene after scene. Our sales were at the beginning was 0, then they went up to 1,000, all the way up to 8,000. Don't put down what you need to put for the balance sheet, which is a snapshot. So are we good on the income statement? I mean, that's pretty nice, easy layout there, huh? We made big profit. Wow, 4,600. Boy, that guy earned like 66% on his money. Statement of equity. Wow, that's a lot of writing for this, huh? I think we can just very simply analyze it this way. You got to bide your time, BIDE for those who like mnemonics. Beginning plus income, less drawings equals ending. We had 5,000. We pulled that right off the trial balance. We had profit of 4,640. We pulled that off the income statement that we did first. We have drawings of 3,000 that came right off the trial balance. So 5,000 plus 4,640 minus 3,000 equals 6,640. A lot of times I don't see people doing this much where they have this increase in capital line. That's optional. You really just need the 4 lines. 5 plus the income minus the drawing. So his business on paper is worth 6,640 at the end of the month. Now it's on to the balance sheet. The balance sheet. And what's the balance sheet? It's simply, let me just go back a little bit. This thing is all over the place, huh? The balance sheet. The balance sheet is simply the accounting equation. On the left side of the page, assets listed in order of liquidity. On the other side of the page, liabilities in order of liquidity plus equity. The operating cycle, you start with cash, you buy things, you sell things, you collect, and you go back, huh? Property, plant, and equipment. kind of chuckling. These things, these slides are like they were just thrown up in the air. And here we go. Liabilities. Understand what current assets and current liabilities are. Assets you're going to use up in a year. Liabilities which you expect to pay in a year are current. Long-term liabilities, that's the stuff that goes out beyond a year. A mortgage. You buy a house. Hopefully one day we're all happy homeowners. You buy a house and 29 years of that mortgage, a 30-year mortgage, 29 is long-term and the 1 year is current. Balance sheet preparation. Balance sheet must balance. Well, I guess that's why they call it the balance sheet. The capital amount does not show net income or drawing. Remember that. When we do our financial statements, we're not going to show on the balance sheet the net income or the drawing. Nobody wants to see that there. That's for the income statement. What we're going to show is just the new balance in the capital account. Use the ending capital amount from the statement of owner's equity. And that was that 6,640 number, was it? Something like that? Yeah, 6,640. So here we go. If there's the equity statement we just did, and now here's the balance sheet. And you notice that all we did was copy, excuse me, copy everything from the balance sheet except the equity. The equity is going to come from our new equity statement. And there we go. And notice the order of liquidity: cash, receivables, supplies, liquid, turning into cash. Any questions on the preparing the financials? Feel pretty good, Christine, with that? Okay. They're just pointing out the owner can make additional investments, which is okay. It just means that you have another 3,000 or so to put in. And I'm kind of glad they showed this here. What we're saying here is this guy had 5,000 in the business to begin with. Then he invested another 3,000 during the month. So his total investment is 8. And then you got the income and the withdrawals. Okay.
I have a quick question, just to make sure I understood when I was reading the chapter correctly, is that when we're working with the trial balance and the worksheet, what we'll most likely see is the total investments as they stand of 8,000. And so we need to look through the general ledger to find the investments made during that period to do.
They'll show it. You'll see it on the, yeah, that's a good question. They'll tell you if there was an extra investment, Patty.
Yeah.
In other words, the question would be something like this: Ramon Balboa had originally invested 5,000 in his business, and then his profit was 2,100, and his withdrawals were 250. And by the way, he invested another 3,000 this month. That's how they're worded for you.
Yeah. I mean,
But
yeah,
the
questions on like the tests and quizzes, that it would be something like that. But I just meant like as a general rule of thumb.
You could still pull it from the trial balance, because the 8,000 would be what you see in the trial balance. The trial balance at the end of last month was 5,000. Then he put another 3, so the balance went up to 8. So you could start with that 8,000 if you wanted to.
Okay.
All right. Oop, fix this. Closing entries. Closing entries. It's closing time. Closing entries. You have your permanent accounts and the ones that are temporary. What's permanent? The balance sheet is permanent. The income statement is temporary. The income statement is temporary because that income needs to be zeroed out and moved into capital. And that is exactly what we're doing here. In other words, the closing entries are looking at your equity statement, and you are preparing the journal entries to go from 5,000 in equity to 6,640 at the end of the month. All right. Permanent accounts are not closed. They go on forever as long as the business exists. Temporary accounts are closed every month. Every month. Revenues get zeroed out, expenses and drawing. They are closed. They're closed by putting them into equity. Closing process. You give temporary accounts zero balances so that you're ready to accumulate for the next period. The income summary account is used. That's our holding account. These two slides here are excellent. This is the easy way to try to understand it. Close the revenue accounts first. Revenues have credit balances. It increases the owner's equity. So you debit your sales accounts and credit income summary. At that point, your sales are the balance in income summary. Then you do the same thing with your expenses, only you credit all your expenses. So this journal entry will start with a debit to income summary and a credit to each and every expense. And when you've posted that entry, the income summary now equals your profit, which we know we have to move over to capital. We did that on the equity statement. Now we have to do it in the general ledger. So once we have the net income number in income summary, it is time to close it to capital. Oops, sorry. We close it to capital. Let me just go back up here. I'm sorry, I skipped the slide. Forgive me. So we know what to do with revenues and expenses. Third, close the income summary to the owner's capital. The balance in income summary is going to represent the net income. And it's going to be sitting there as a credit balance. So you debit income summary, credit owner's capital. Okay? And then drawing, you don't need the income summary. It has nothing to do with income. Drawing, you just credit it and debit owner's equity to reduce it. So it's really 4 steps: revenues, expenses, income summary, if you will, and drawing. And they're just showing you here a little bit. Why is this thing giving me a problem here? Hold on. Oh, all of a sudden, it won't let me. Just give me one moment to get a little organized here. Okay. Now I can see it. Owner's capital. We had revenues that had a balance on the credit side. We debited the revenues. Where's the revenues? We debited the revenues and we credited the expenses. And both of those got brought up to the income summary. That left the net income in the income summary, which we then moved up to capital. And drawing, of course, has the impact when we close it with a credit of debiting owner's capital, which reduces owner's capital. And here they're just reminding you companies lose money too, and you can end up with less capital at the end of the month. But our publisher is a glass half filled kind of guy. We're not going to see stuff like that, okay? And here's your closing entry in T accounts if you want to look at them. What did we do here? What did we do? We started with the delivery phase. That was step 1, remember? Debited all the revenue accounts. We credited each and every expense. We add them up and they go up here as a debit. That leaves our income of 4640 there. And the 4640 goes up into capital, as does the drawing, straight up into capital, okay? Closing entries, people get confused a little bit by them. The only reason you would get confused is if you don't understand why we're doing them. If you understand why we're doing them, it makes a lot more sense. Why are we doing them? Because we have to move the net income and drawing to update capital at the end of the month. And then once you've put them in there, there's only one less thing to do. Well, here we go. Let's look at the journal entry. This would be a good visual, huh? There's your 4 journal entries. Debit revenues, credit income summary, debit income summary, credit all of your expenses. Now the balance is 4640. We debit income summary, and now Mitchell Capital is updated, and Mitchell's Capital is reduced by clearing out the drawing. Oops, hold on here. I'm getting myself a little screwed up here. Prepare a closing trial balance. Hold on. Where did this come from on the left here? Goodbye to you. Okay. And then the last thing is prepare a post-closing trial balance. It's prepared after the closing entries. And at that point, the only thing you're going to have left is the balance sheet. And you're going to copy every one of these numbers from the trial balance, your ending trial balance, except for the capital, which came from your equity statement. Okay. Steps in the accounting cycle. Well, this is kind of wordy, but I think we're at the point now where this makes a lot of sense, no? What do we do during the month? We're getting source documents and we're working with them. We write journal entries. We check them out. If they're okay, we post them to the ledger. And we do that every day for 30 days. Month end comes, we prepare a preliminary trial balance and we record adjusting entries as we see fit. We finish that worksheet. We post our adjusting entries, prepare the statements, closing entries, post-closing trial balance. Well, that's a mouthful, but I think it makes pretty good sense now. And that's all we have in this chapter. Statement of cash flows. The only thing you need is these 3 words here: operating, investing, or financing, okay? Financing is borrowing. Investing is buying a big piece of equipment. Operating is everything else, whatever the business normally does. When Coca-Cola sells soda and that cash comes in, that's operating cash flows. That's the good cash flows, okay? So what do you think? Anything else I can go over for you in preparation for your test today or tomorrow?
I have just one more comment about actually the quiz 6 as a reminder. If you go back to like the what to do during and then at the end of the accounting cycle, like the list of steps, that there's a question that asks like, what step do you do at the end of the accounting period? And it has both prepare a trial balance and prepare a post-closing trial balance as the 2 of the 4 answers.
And what was the question? What's the last thing you do?
No, it just says, what do you do at the end of the accounting period? Or what of these 4 steps that it gives you do you do at the end of the accounting period? And if you, I mean, I put prepare a closed trial balance because that was like the final step, and I felt like that's what maybe it was asking for.
Yeah.
But because we have the, this in the book and in the PowerPoint, technically both of those steps happen at the end of the accounting period.
Yeah, they do. I mean, the post-closing trial balance is the same as a trial balance. I mean,
yeah, it's just,
yeah, that sounds like another vaguely worded question.
yeah.
That one, it's just like that one you brought up at the beginning of the meeting with that wage accrual. Was it for 1 day or 5 days?
Yeah.
One reason I like to get back in the classroom, and I'm glad to know I'm back in the classroom in a couple of weeks with the new semester, is I give out my tests, with my questions. And my tests, they include, you actually writing the journal entries. I'll
And it's
give
on
you
a piece of paper?
Pardon me?
It's on a piece of paper?
Yeah.
Dang.
Yeah.
Why couldn't I have taken this next
That
semester?
sounds a lot better.
Right?
You might not like that though. It'll be on a Scantron. You know the Scantrons.
Yeah. They're
Yeah, it's on, my tests are typically maybe, let's just say 40 questions on Scantron. And then I always try to put at least 2 problems from each chapter. And if I'm in a very ambitious mood, I'll give you 4 problems from each chapter and ask you to pick maybe 2 of them that you want to do, that type of thing. It makes it a little harder for me when I go to correct, but it's good for you guys because you can get a lot of partial credit, even if you
Yeah.
botch up a problem, So,
Yeah, the other thing is like these ones, they're like, it's easy, but there's a lot of like weird stuff of kind of just like vagueness, and it's like well, they're easy, but they're also vague.
yes.
Yeah.
Yes,
I kind of overanalyze sometimes when they're vague, right? I kind of read.
I've spent like 20-30 minutes on like one problem. I'm just like,
Um,
do I trust this?
Yeah,
Yeah.
me
But I could
too.
just like, turn in the quiz and then retake it when I notice it's wrong. But I just like, I don't really have anything else going on right now. So it's
Yeah,
just,
right.
Well, if you're
And the
spending,
exact wording,
Yeah.
the exact definition, not a word or 2 off, because that's a
Yeah.
different definition.
if you're spending
Yeah.
30 minutes on one problem, that's a problem in itself.
yeah.
There's nothing
I
should.
tend to do that.
I mean,
Who's taking 230 next semester?
I'm actually taking it, I think, like next spring, just because of how my other classes have lined up.
Yeah. Are you
I want to
taking
take
it
it in the fall.
fall? What about you, Christy? You gonna take 230?
If I'm ready for 230, I'll take 230. I've been trying to drop this class for the last 2 weeks, but I can't get any support from the admissions department.
About what? About dropping it or?
Yeah. But now I feel like I've kind of got it, so maybe I won't drop it.
Okay.
So
Yeah, I mean, whether you
we'll
realize
see.
it or not, you're being prepared pretty well. You got a good mark on the first test. I can tell you're picking this up now, and
Yeah,
you've caught up.
I'm picking it up. It's just a matter of practicing it.
Yeah,
Even on the homework, it's one problem.
yeah,
And
Yeah.
so I don't feel like I've mastered it,
yeah,
or on the quiz, it's one problem.
yeah. Now it
And-
gets. Yeah, no, exactly right. You just got to do it a little bit at a time, and let it click in there. Now, when we get to the next chapter, we're skipping 7, 8, 9. We're gonna do those at the end of the semester. We're gonna get into areas that are, a little more tricky, a little more demanding. And again, just divide and conquer. Try to keep up with the lecture, try to do as much of the homework as you can. You know where to seek help. I'm tutoring like crazy. That friend of mine's a good tutor. I might have mentioned to you guys, Bill, if you ever need anybody. So, there are resources out there. So,
But I would love to take 230 next, but I just need to make sure I've got this down.
yeah, I'm teaching 230 next semester. That's
Could-
why. That's
Could
why
I take
mentioned
it? As much as I'd love to take it in person, I have a child with special needs. So could I take it
Oh.
online still
I
in the fall?
I don't know. You can certainly do it next semester. I don't know about the fall. I have a feeling you probably can because there are students who have said that they like the online a little better and they have excuses for being it online. You know what I mean? Like yourself, you got
Right.
a problem with the family or
Yeah.
somebody has children at home, whatever.
Yeah. Yeah.
But I
Plus
just don't know.
working, I'm
Yeah.
working too. So I'm like,
Yeah, it's tough.
Yeah.
yeah,
Tough
right.
on all of us. So,
Yeah.
all right. Well, it's good to see everybody. Any more
Thank you.
questions? If
No, I'm good.
I'm
if
gonna
not,
work through all my quizzes today. And are you tutoring this evening?
yes,
Okay. If I get stuck, I'll hop on.
5 o'clock. Maybe see you later. Okay.
Hey,
Hopefully
you know what? Could we? So Krista, so are you retaking the quizzes, like because like I've only done the pre-test quizzes. I didn't know you could actually retake the other quizzes.
Yeah, you can.
You
Yeah.
can. Okay, cool.
Is there a pre-test quiz?
It is so hard to find, but I found them. It's like
Where are they?
Oh, like the study guides things.
yeah. So you go into the study guides and then
So
like
yeah, no, the quickest way. So if you go to like Cengage, okay, when I log on, it brings me to the dashboard where I can see like both the book and the class.
Yeah.
And okay, it's not loading in right now, but if I do this, this is just because I have a weird bookmark and it doesn't automatically sign me in. Okay. Okay, once you're there and then you go to like the class, there's three little sections. Sorry, once I can actually see it and it loads in, internet slow. So like when I open it, it starts on assignments and it says right below that, it says all assignments I can take now, and assignments I can practice now.
Oh,
Um,
I don't think
and-
I've ever been to that screen.
It's so hard to
Oh,
find.
here, I can, I think I still have the ability to share screen.
Oh, here, let me hook you up if I miss
Oh yeah,
it.
you're sharing yours. Okay, yeah.
Hold on.
So if I go. So
Yeah,
that's-
you're good. Oh, there you go. Thank you, Patty.
like normally I open up to this screen
Mm-hmm.
and then, so this
Go up
one
to-
shows
up
like
to the study
guides
tool.
I haven't taken, but if you go to all assignments,
Yeah.
you can
Oh,
see everything here. Here, if I go like, so let's see, chapter.
Or you can go to the study guide at the top.
Okay, so, oh, I can't retake this.
Yeah, so go up to the top where it says, way at the top, it says assignments and grades, and then way over there, click on that one. And then click at the very top on the adaptive study plans. And there you go. All of
oh
them.
wow, look at that.
Okay, cool. Actually, wait.
You're
I
hiding
didn't
it,
know
huh?
about this one. So if I click.
Yeah. It took me a while to find it.
So what happens if you open up one of those things, Patty?
It's cool. They got like all kinds of little, they're just quizzes.
So it's.
Ah.
So yeah, no, it's the same quizzes that we took before. It's just that this is the way to access them even after you've taken them. I had
And was that stuff on the test?
Yeah, I
yeah.
found a lot of it on there. Yeah.
Yeah.
Definitely, there was quite a few questions from the quizzes on the test. Like I had printed out my quizzes and there was some like verbatim
Yep.
questions
Yeah.
on, including the one that I missed because I was reading it too quickly.
I totally get that.
How long was the test? 50 or 40 questions?
50.
50.
Wow.
Yeah.
Wow, you guys are going through 100 questions this weekend.
I think, I mean, honestly, I think the test, or like the first part of the test, it took me like 15-20 minutes.
Right. I know. It was a lot different. I was expecting it to be so hard.
Because
But
it was so similar to the quiz. I was kind of like,
yeah,
oh,
I
I've
think
seen
that's
this.
why.
So we weren't working out any problems. It was just multiple choice.
Oh yeah, that's the other
Multiple
thing.
choice or
A
truth.
lot of the time gets taken up by the
True.
free response because I'm trying to format it so that it like look like it's like, okay, I actually kind of gave up on it like on the recent one where it's like prepare a like journal entry, and I'm like, I can't because it just doesn't format correctly, and I'm just gonna put the numbers down and hope it's good enough.
Sounds
Do the
good.
best you can.
Yeah.
Yeah. So that will take a lot longer when we're
Actually,
doing a
like having to
report.
do math and entering numbers and stuff, and
Yeah. I'm like, if we have,
to perform like to make an income statement or something, then it's gonna take some time.
right. You know what I did on the income statement and all that? I just for in case, is I printed some of those blank forms that they gave us that it says blank forms, and you go in and they're Excel forms, and I printed them. They're at the bottom.
Where are those?
They're in the hold on, I'm in here right now on my iPad. Is it with the tutorials or no? You go to the modular.
Oh, I see it. Yeah, if you scroll all the way down past like chapter 9, forms, blank accounting
Yep.
forms on. Oh my god.
Where? Hold on.
It's pretty
Okay, here, I can
cool.
here, I'll do the thingy again.
If I could have the format ready,
I
like
printed
that would
those.
be huge.
And I even made them like, because you have to kind of blank out a couple of the things that are on there. And then I just printed them out. So then I can just do it. And I have my
Oh.
Google Drive. I could just go, phew. And then there's that too. That's the beginning. And there's like a button on each one.
Oh.
That'll download all those, but then.
What do
Yeah.
you mean a button on each one for different things?
Oh.
Yeah. So there's like on the Excel, because if I opened it up in Excel, so all the, the things at the bottom, you can just click on the I'm just took an Excel class, I should know this, but the tabs at the bottom.
Yeah.
And it has balance sheet, income statement, all of them all the way across.
Oh, it comes out in different tabs, huh?
Yep.
Ooh,
It's pretty cool.
yeah.
Yeah, no, so
So-
I opened up an Excel, but I have to reshare. But yeah, no, so
Okay, that's super handy. Thank you.
Yeah. Yeah. This
no,
way.
that's great.
It's,
That is it's gonna save so much
Yeah.
time.
right. I mean, I didn't want to reinvent the wheel to do each one. So,
So do you just copy and paste it then?
well, what I did is I just, because if you open it up in Excel, then you can just print the forms from there. And then, so now where's my little,
Oh, right. And then
I
so
knew
when you,
them.
oh,
here they are. They're underneath my thing. So now I've got like income statement. Oops. I don't know if you can see it. Probably not.
So I'm sharing again.
But
So like when you open up an Excel,
yeah, there you
you
go.
have
It's
like
got all
each
the
of
ones.
the
in.
different like pages for each of the different forms.
Yep.
Holy
And
cow.
then from there you can like say, okay, I want the general ledger, then
Yep.
file, print this
Yep.
page, and you're set.
Yep.
Oh, that's just.
And then are you submitting that to your test or are you typing it in on your test?
No, I just handwrite it on the blank form that I have, and then I'm gonna just scan it and
And-
upload it.
And upload it?
And take a
Okay,
photo of it, upload. Yeah.
Yeah,
that makes sense.
exactly.
Looking good, huh?
Oh, that's awesome. Thank you
Oh,
for
no.
sharing your wisdom.
Oh,
You're-
that's huge. That will save so much time.
I just hate all that. And I'm too nervous anyway. So I'm like, the least amount of time, the better to get that.
No,
I know you're
work
paying.
smarter, not harder.
Yeah.
And then
Yeah.
also your formatting's correct.
Yeah.
And so that's like
Yeah. That's like
a
the
big
other.
part of it.
Yes,
Yep.
that is a big part of it. Yeah.
Yeah.
Yeah, I remember
So-
on like the first quiz where it asked us to like do like the income statement of owner's equity, and the thing I spent so much time like tabbing the right or not
Mhm.
even tabbing, because you can't tab on the canvas.
No,
Yeah,
it
sitting thing.
doesn't.
So I was like, I was just mashing the space bar like,
Yeah.
God.
You know what? I use this because I found it right before that.
Yeah, no, oh my god, I wish I oh my god, I feel so bad for that cat. So there's this cat that comes over sometimes and it likes to eat the chipmunks, and so my neighbor really doesn't like that cat. And so for a while the cat had like a bell on it that's supposed to like, scare off the chipmunks or whatever, but now it has like one of those dog toys that's filled with bells, and like it's just like this like cloth
Oh my
collar, and it's massive. Like it okay, so if like the cat's head is like this, like
Yeah.
the thing that it's wearing around its neck is like this.
That cat's hunting days are over.
Yes,
Exactly.
it is so colorful. It's just
It is
grateful
now the
little
day of the
feel.
chipmunk.
Yeah.
Yeah,
You're gonna be
yeah, the
fine.
superior animal. I'll tell you, back in 1973, I was dating this girl and she had a cat in her apartment. And she said, "Oh, why don't you get one, honey, for your apartment?" I did in December of 1973. And 2 weeks later, she dumped me. And I was stuck with that cat for 21 years.
21 years.
I thought Bugsy would never die. It was just unbelievable.
We have a cat like that where he's like, we don't know how old he is, because he was anywhere between like 2 to like 6 years old when we got him. And now he's been around for like 14 years, and he just is completely fine and happy. And we're just like,
Yeah.
You're never gonna die, are you? We don't want him to. We love him so much, but it's just kind of
Right.
like, is he just gonna like wander off one day? Because he's just so old.
Yeah.
That's what
yeah,
happened to
yeah,
my old cat.
Yeah.
Yeah, they tend to do that.
Same
Yeah.
with the pets.
Yeah.
All right. Well, that was a good session. Appreciate
Thank
all the
you.
inputs at the end here. Okay.
All right. Yeah.
All right.
Thank you.
Well, you know where to
All right.
find me tonight if you need me.
Sounds
Go print out
good.
those forms.
Hey, do you have
Alright.
the session tomorrow too? Is it the noon session? Just,
Yeah, I got tutoring tomorrow. Yeah, noon.
okay. All right.
I will be watching baseball while we have the meeting. That's
Okay. I don't think I'll need you, but I'm just asking.
all right. We'll see you guys later. Okay.
Alright.
All right,
Have a good one.
Thank
Bye-bye.
you.